I doubled $100 account in a single trade using a very simple Nasdaq trading strategy. In this video, I'm going to be teaching you this very simple and beginner-friendly ICT strategy, which I not only use to double that account, but I also teach this to my beginner students to enable them earn from the market while still learning. I'm one of those traders who have always been thinking that growing a small account is rocket science, or it requires some level of precision and crazy win rates to execute. So I've always been searching for how to do it without knowing that the knowledge which I sought for were in my hands already. Without further ado, let me show you a simple strategy which you can use to grow any account. At the end of this video, I'll tell you the kind of mindset and position you need to be operating from to effectively carry out your account flip. So if you want to know, stick around till the end. In the meantime, let's get to charts. This strategy I'm about to show you works on majorly the indices market, and that's because of the timing. You can also incorporate this on gold, but strictly in the New York session. You would also be needing to set your trading view chart to a particular time zone. So grab your notes or save this video so you could go over it again. So I'll just do a rundown of the strategy. Then I go to the chart and show you a couple chart examples. All right. So now, what do you need to have in place? First things first, you need to have your charts set to New York local time, just like this. It's set to New York local time. All right. That's the very first thing you need to have in place. So now, basically, you would come into the market at 8:30 Eastern time. Come to the market at 8:30 Eastern time. Okay, Eastern time. And after 8:30 is what you're looking to execute on the setups I'm going to be showing you right now. All right, so the first thing, have your chart set to local time New York and come in at 8:30 Eastern time. You could come around 8:25, that's fine, but at 8:30 you should be in the market. Now when you come in at 8:30, you would be needing to mark out two things. The first line you'd mark out would be midnight of New York. So you're going to be marking out 0:00. So that's like midnight, New York midnight. And then the next line you'd mark out on your chart would be the 8:30 you came in. It would be the 8:30 you came in. The reason you're marking out the midnight is so that you can be able to spot liquidity pools easier. That's why you're demarcating this on your chart. You get to understand as we progress. All right. Now, what are you looking forward to? You're looking forward to marking out highs and lows that were created before you came in at 8:30. So you're going to be marking out this high and this low. Okay, now what's the logic? The logic is simple. You mark out the high and the low. You want to look forward to price taking on one side and giving you a buy confirmation to the other side. Okay, let me repeat. You come in at 8:30. All right. Now market structure is going to be playing out prior to when you come in. Okay, market is going to play out. But your business is to mark out the high and the low. Okay, the high and the low prior to 8:30 when you came in. Okay, it could be relatively equal highs just like this, or relatively equal lows just like this, or relatively equal highs just like this. But your business, okay, is the high and the low closest to the time you came in. All right, that's your business. So what do you do again? Price comes, watch forward to price taking out one side. Okay, one side of the liquidity should be run. All right, and you look for confirmation to buy. The confirmation is what I'm going to be showing you soon. Confirmation to buy, and you ride it all the way to the other line which you have marked on trading view, which is buy side liquidity. So what do you basically have? You have buy side liquidity over here. Okay, liquidity resting at old highs and equal highs is known as buy side liquidity, and liquidity resting on the opposite side is known as sell side liquidity. So SSL and BSL. All right, now what is the confirmation? The confirmation is very simple. let's go into more details here. So let's say this is your liquidity line, right? And price traded down and grabbed probably liquidity here. Okay, price grabbed liquidity here. Now you're looking forward to the raid or a break of structure. You're looking forward to a break of structure in your intended direction. So let's say we are looking forward to take price all the way up here, for example. Let's just mark out something random all the way up here. So what are you looking for exactly? You're looking forward to price coming to take out this high, okay, a lower high. Okay, so we want to basically see price create a higher high. So we want to see a break of structure. This is what we refer to as BOS, break of structure, or MSS, market structure shift. Okay, that's what it's referred to as. So when the break of structure happens within the range of where the price broke structure, within this range, all right, there's something you need to be looking out for, which is called a fair value gap. You need to be looking out forward to a fair value gap, because on that fair value gap is where you're going to get your entry. So where would the fair value gap form? Let me show you. Now, after you've had the break of structure or market structure shift to the upside, you're basically going to have something like that. So you're basically going to be having something of this sort called a fair value gap that would be formed inside of your break of structure range. It's going to be forming inside of your break of structure range. So I basically call this like your break of structure range. Sometimes you could have the fair value gap here. It's still ideal, but it's still within the range at least. So what are you looking forward to price doing? You're looking forward to price coming inside here, and then this is where you'd have your entry. Okay, let me use a red for the orders. So then this is where you have your entry. Pardon my crooked lines. This is where you have your stops, and this is where your take profit will be. So basically what happens is, as price comes down to this level here, you're having your entry. You're either placing a buy limit, or you're waiting for once price taps in, you go click buy on your MT5 or your MT4 or your trade locker or whatever platform you're using. Okay, and then put your stop loss below structure and ride the market to your take profit. All right, ride the market to your take profit. Let me do one more example, one more breakdown before we go to the chart. So you have the market delivering, right? And then you come in at what time? At 8:30. Okay, come in at 8:30. So you're basically going to be marking a vertical line on your trading view, just like this. Come in at 8:30, and when you come in at 8:30, you're looking forward to marking out the highs, all right, the highs and the lows prior to 8:30. What is the next thing that's going to likely happen? Now, you want to see one side taking, and you look for a break of structure, right? You look for a break of structure. Let's zoom in. A fair value gap created, you enter on the fair value gap, stops below structure, targets at the buy side liquidity. For the sell side scenario, it's exactly the same. You want to see the buy side liquidity rated, okay, a break of structure to the downside, fair value gap created. If there's no fair value gap, there's no entry for you. You enter on the mitigation of the fair value gap, stop loss below above structure in this case, and you ride the market all the way to where? Here. It's as simple as that. As simple as that. Now there are variations to this. Variations to this is where you have an order block here. If you don't know order blocks, there's a video I dropped on order blocks. Do well to check it. If you don't know how to spot fair value gaps too, I have a video, a very detailed video on fair value gaps. All right, so do well to go to my channel and check this video. I'll try to link a card somewhere on the screen that will just easily take you to that video. So that aside, let's keep going. So you could have a break of structure prior to 8:30 and an order block created sometimes. In that case, if for example price took out the lows, you could be looking to exit at this order block just in case the market wants to continue bearish. Or if the market doesn't break the lows first and price gets into the order block, price didn't get here. Okay, price literally got where, now let's change the color so we don't have contrasting colors. Price didn't get here, but price came into the order block and started giving you sell confirmation. It's valid to try to take these sales and target sell side liquidity, but mind you that when you're trying to take these sales, your entry could show up and you get stopped out. That's fine. It's okay to take a loss and you do what, you take a re-entry. All right, with the ideal setup, have your trade triggered in your fair value gap and then ride the market all the way to these lows. Very simple. Okay, so let's go to the chart and see we got a couple examples. Okay, let's start from a random day here. I think this is the 10th. Like I said, first things first, you'll be setting your chart to New York UTC -4 New York local time, and you're gonna be marking out two things. First thing you're gonna be marking out is midnight. You do this every day, so midnight open, and you mark out the next, which is gonna be 8:30. So you're gonna be hovering around to look for 8:30 right here, 8:30. Now, what is our high and what is our low prior to 8:30? So we're marking our highs. We have this, right, as the highs prior, and we have this as the lows. This could be the lows, right? This could be the lows, but if you look at this properly, this price didn't get up to this point, and on the 5 minutes, I don't want to go there now, but on the 5 minutes, this is going to be a very predominant low. Okay, I failed to mention that this is majorly looked for on the 15 minutes. If the 15 is not that clear, go to the 5 minutes. You don't look for highs and lows price 8:30 on the 1 hour, because I mean there's no 8:30 on the 1 hour. Right, so you're not looking for it on 30 minutes either. It's the 15. It's the 15. So if you look at this here, you'd see that our lows got taken with this sort of candles. Confirmation showed up and price went to the highs. Let's go to another day. Let's go to another day. This is the 11th, right? So ideally, we have midnight, and let's look for 8:30 somewhere here. 8:30 is going to be somewhere here. Good 8:30. What are the highs and the lows? This is the low, right? This is the low, and this is the high too as well. This is the high, and if at all you're looking forward to anything, same thing here. Lows got taken, price went to the highs straight up. You're not gonna be wrong if you're marking out this as the highs too, mind you. You're not gonna be wrong if you're marking out this right here as the high. You are not gonna be wrong. But if this is your high, you may not get an entry because of, you see the speedy reactions from here, right? You may not get an entry, but if this happens, so you could easily extend your high. So you could say, okay, after the lows got taken, you move to the opposite direction. Let's go over to the next day, Wednesday. I think this was a CPI day, right? Wednesday, June. I think this was a CPI day for us to not have anything valid of sorts here. This should be a CPID. It's a high impact news. I don't trade on those days, so you shouldn't be trading. Let's do for the third day. There should be something here for us based off of what I see on structure. Midnight and 8:30. All right, what's our high? What's our low? For marking out, this is very obvious as the highs, right? And the opposite side, which is London lows, as the lows. Now I'll give you a quick hack here. The reason why I asked you to mark out midnight is because it easily helps you differentiate something. This is Asian session, this is London, and this is New York. So if I'm looking out for what highs and lows to mark as liquidity pools, I know that this is Asian lows, this is Asian highs. Very important. These are London highs, these are London lows, and this is New York highs and New York lows. So having to mark out midnight helps you separate your chart, and so you could be able to know what session you're in and what happened in each session. Okay, and now look at this. Highs got taken,
and we took price to the lows. Let's go to lower time frame and let me show you what the entry would look like on this one. So let's go to the 1 minute. Today is 13th. So let's go to the 1 minute and scroll all the way back to the 13th. Let me show you what the entry is going to look like.
Okay, very technical day here, but I like this kind of days because it helps build experience, right? Now, this was the high I got taken, and this is our target. You can see that at 8:30 there was a swift move to the upside, giving us a very big swing to work with. But if you're looking at the lows that you'll be looking forward to your breakup structure, you could take out this lows, for example, here. This one right here, that's a low. That is a low. Then where's the fair value gap within the range? This is the fair value gap within your range. And price never really got to that fair value gap. But although if you step to higher time frames like the 3 and the 5, I don't want to go there because of time. You see that this is the entire fair value gap to be looking forward to. Okay. But I would not advise you enter on this particular fair value gap because we've delayed so much. I don't know if price is just going to come and fail this fair value gap and go the other direction. So we could mark it out and look for the reaction of price in there. So what was our reaction of price? We're looking forward to see another structure created, which as you can see, there's a clean fair value gap right here, and we broke these lows very easily. Okay, we took out these lows right here. You can see that the bodies of this series of candles close below these bodies, and even if you don't want to classify these lows, these are also valid lows. Okay, valid lows. And if we're taking our sell entry right here and our stop loss above, slightly above structure, and target would be what now? The target we had, which is like a 3-hour trade, and you see that this trade just went straight up to take profit. So if you want to measure how long this trade took, I don't know, it took like 22 minutes or so. Right, 22 minutes. And in 22 minutes, you just made 3 hours. So if you're risking like $100, you're making 300. If you're risking 10, you're making 30. Do you know how this one works? On the 14th, I basically had 8:30. You're looking forward to 8:30. 8:30. Okay, this is 8:30 right there. This is 8:30. So you see that we have the lows and we have the highs, and we didn't get any entry in this particular day because the highs in price didn't get to the highs, neither the price come to the lows, and we should ideally be exiting the market at 12. 11, I prefer 11, but then for you guys coming in newly, you could say 12. At 12 we should be exiting the market, so there was no trade on this particular day. On the 15th, oh, there's no 15th, it's a weekend already. All right, so I really did a whole 1 week for you guys, and in 1 week we were able to get 4 setups. One was no trade, then we had 3 other days which were winning days. This is an ideal winning day. This is also an ideal winning day, and this is an ideal winning day. So your risk to reward expectancy with this system is basically 1 to 3, 1 to 2.5 ish. So if you had a 1 to 3, 1 to 3, and a 1 to 3 here, that's like 1 to 9, and you have done 9 hours in 1 week. So with this, you can easily grow any account, pass any funding challenges, or anything of sort. But ideally, this video was targeted at growing accounts, and this is the system you would need when it comes to growing a small account trading Nasdaq. I teach these things weekly in my mentorship. I'm literally just giving you something you could use to make some bread off the charts. But there's more to it. There are other concepts to incorporate to what I just taught you to make it even more sharper and refined. And that is taught only in my mentorship. If you made it to this point, good job. Like I promised earlier, to tell you the mindset and position you need to operate from to effectively carry out your account flip. Mindset wise, you need to understand that you're taking aggressive risk, and trading is a game of probabilities. So if you're faced with a losing streak at that point in time, you will blow your account. So if that's the case, what's the way out? Abundance. Don't try to flip your last $50. You'd most likely blow it. If 50 is your last money, probably do two $10 accounts. That sums up to $20. And then keep the remaining $30 for yourself. And when it comes to what position you should be in, you need to know what you're doing. And that entails gaining full mastery of your system or any approach you're using to trade the market. You don't want to be testing waters and losing money anyhow. If you want to learn how to trade the market and make money off the charts, I recommend my mentorship program where I'd walk you step by step on everything I did to get profitable. The link is in the description for more information. If you want to get my free trade calls and analysis, do well to join the free community. The link is also in the description. There are two major things I focus on in trading that greatly improve my performance on the charts, and I talked about them in this video. Watch it and gain insights.